This is the performance summary for the relative strength strategy for week ending July 3rd. Let's start by inputting the current value into the portfolio. So far for the month of July, we're down 1.96%. And these are the three positions held in the three asset portfolio. First one is FDCPX, which is the Fidelity Tech Hardware portfolio. And the holdings in that one, the top holdings are Western Digital, Cisco Systems, Samsung Electronics, Apple, and Arista Networks. And over the long term, this is how that mutual fund has performed. This one goes back to 1998. Next one is FSAGX, which is the Fidelity Select Gold portfolio. And the top holdings in that mutual fund are Newmont Corp, Agnico Eagle Mines, Wheaton Precious Metals, Barrick Mining, and Franco-Nevada. And over the long term, this is from 1992, this is how that mutual fund has performed. And the next one is SLV, which is the silver ETF. And since 2006, this is how that ETF has performed. And the next two are the ones that make up the extra two holdings in the five asset portfolio. So the first one is FFGCX, which is the Fidelity Global Commodity Stock Fund. And the top holdings in that one are ExxonMobil, Corteva, Archer Daniels Midland, Bunge Global, and Nutrien Limited. And over the long term, this is how that one has performed. This one is going back to 2009. And the last holding is FPHAX, which is the Fidelity Select Pharmaceuticals portfolio. And the top holdings in that one are Eli Lilly, GSK, Viatris, UCB, and Merck. And over the long term, this is going back to 2001. And that's how it's performed since then. And let's input the current value of the portfolio into the cumulative tab. So this is what the equity curve looks like. This is the actual equity curve, the thick yellow line of my portfolio trading the strategy. And the thin gray line is the S&P 500 benchmark. And my actual account gain since the inception is 68.7%. And let's also look at the performance of this system long term. Here's a back test for relative strength going from 1991 to the present. And over that time frame, the strategy's annualized rate of return is 18% compared to only 9% for the S&P 500. And year to date, the strategy is up 24.1%, whereas the S&P is only up about 9%. And this is how the equity curve looks over that time from 1991 compared to the gray line, which is the S&P 500. And this is the back test of the five asset portfolio. And what that is, it's slightly less return, but it's got slightly higher risk-adjusted parameters because of the increased diversification. So over that time frame from 91 to present date, the five asset portfolio's annualized rate of return is 17.3% compared to 9% for the S&P 500. And year to date, the five asset portfolio is up 22% compared to 9% for the S&P. And this is how that equity curve looks. So if you're interested in learning more about relative strength, or you'd like to sign up for my Signal service where I email you the mutual fund and ETF picks into your email inbox on a monthly basis, please visit my website at returnstream.com. Link is below. Thank you.